Welcome everybody to this week's edition of our weekly forecast, where we are going to be analyzing what we anticipate the markets to behave in the coming week. So for the past 4 or 5 weeks I've been preaching that dollar is gonna get weak, and it has played out quite beautifully. We've had 3 weeks of consecutive weakness coming into the dollar index, which is what I anticipated. Those in the mentorship group, you know already how we traded this pair and how it affects the other majors that we trade. So now, prior to this week, to last week's rejection from a strong demand zone, I had anticipated last week also to be weak for dollar index, of which we saw that prior to FOMC. That's when we got this strong rejection from the demand zone, of which we already anticipated that price is not going to break that level quite easily. So if you recall from last week, I anticipated that dollar index was going to test the 96,115. That was the target on dollar index, 96,115. That's where I anticipated dollar index to trade to, which is this monthly level. So from last week, Wednesday, after FOMC, dollar tried to gain back some losses from the previous week, but not by much. But it did rally and then eventually settled for 97 price point. So what does that tell us in the coming week? As you can see, right now dollar rejected a strong demand zone. You see, that's the number one thing that you must put into perspective. Dollar has rejected a strong demand zone, which is coming in at 95.80. You see, the 95.80 price zone, which is our weekly bullish order block. Why I'm saying weekly bullish order block? Because if you look at this last down candle before the rally, you see we've got this last down candle here before we saw this rally to the upside. So that becomes our weekly bearish order block. Mentorship guys, you know what that means. If you haven't joined the mentorship, for a further detailed explanation of that, just join the mentorship and we're gonna help you. So in the coming week, I'm anticipating a bit of further gains coming into dollar, not by much, right? But the coming week we could see that kind of price action where there's really not much which is going to happen, but we are going to see a bit of gains coming into the dollar. And when I say gains, I mean we're going to see a bit of bullish momentum, right? But from a higher time frame perspective, dollar is still bearish. We haven't seen the last of 96,115 at this moment in time. We haven't seen the last of it. So I'm expecting dollar to push a bit to the upside, probably close this gap. As you can see on the weekly, we've got a fair value gap there, which has been left open. See this old low and last week's high. You see this gap. Before we see another strong push to the downside, I'll be anticipating price to close this gap. and then eventually continue with the downwards momentum. But now, how do we back up this kind of analysis? That means we need to keep an eye on the fundamental side of what's happening, especially in the United States. The unrest which is there, the protests, the Black Lives Movement issues. Eventually that is gonna be priced in on the market. As it is, that hasn't been priced in. Right now we are dealing with the effects of COVID, the shutdown. That's what's affecting the dollar at the moment. But since these protests keep on going and there's no end in sight, eventually we're gonna see this getting priced in on the market, and that's gonna be quite negative for the dollar, because there's unrest in America and that's not good for the dollar. But at the moment it hasn't been priced in. And the Fed, when they met last Wednesday, they tried a bit to calm the markets. That's why we saw this rejection from a demand, meaning dollar index was appreciating in price. So in the coming week or 2 weeks, I'm anticipating dollar index to close that fair value gap, this gap here. Once it has done that, then I'll be hunting for bearish price moves to the downside. But yes, market can also open and drop to the downside, so we really need to focus on Monday's trading range to see how it's gonna open and how it's gonna trade during Monday's session. So that's very important to take note of. But for now, take note of this gap. I'm going to analyze it in more detail on a blank chart. I don't want to disturb my levels which I've marked. So if I'm anticipating dollar to trade to the upside, I'm probably watching the 97. I'm probably watching the 97, my daily level, which is coming in at this bearish order block. I'm expecting price to at least trade to 98 price point, right? And then from there, that's where I'll be hunting for short trades. Right now, dollar could gain as much as going all the way to 98, thereby closing this fair value gap. So in the coming week, expect a bit of bullish movements, bullish momentum on dollar index, which in turn is going to support bearish momentum movements in Euro USD and bullish ideas on USD JPY. So now looking at the monthly, we are now on a weekly chart. Let me just switch to a monthly quickly so that you can see what's really happening. So you can see already June has tested our bullish order block, and there's been a strong rejection to the upside. This is not a coincidence, guys. You see, it's not a coincidence. If you look at the current month is let's see, where are we? Our low came in at 95.93, and if you look at this last down candle here, let me just highlight it. Focus on this last down candle here. If you look at that candle, its closing price came in at 96.095, and our low for June is coming in at 95.095. You see, that's a few pip dip into this bullish order block before we saw a rejection. You see, meaning the buyers at this level, they will look to hold the price whenever it dips down. So already June has dropped massively, right? The weakness which we were anticipating. So now we have had a strong rejection from a demand zone. So expect further rejection coming in June, the last 2 weeks of June, meaning dollar will be appreciating a bit, and that means all the way probably to 97.80 or 75% retracement of the drop that we have had already. So now let me go to a weekly chart. So you must anticipate this old low here, or this old low, to be tested during the month of June or early July. Now on a daily time frame, you can clearly see what I was mentioning, that we could see dollar trading to 98. We can have a clear price rejection or a strong rally from this demand zone, because already you can see price has shown us evidence that it wants to go to the upside by clearing up these old highs. See, so we can have a scenario like price trades to 98 and then drop further to the downside, right? So let me see what that looks like on a H4 chart. So on the H4, you'll be anticipating price to trade to 98. Now there's a chart which I've shared on quite a few social medias, Facebook, Instagram, Twitter, and all that, and even on the group. If you remember correctly, this H4 chart, I shared this chart of dollar index. Price was on this bullish candle here, and I highlighted that the buy stops here are going to be cleared. Since price has already cleared the sell stops during FOMC, you see, that's when there was a stop hunt to the downside. You see, sell stops were cleared during FOMC, and then I highlighted that the buy stops above these 3 equal highs here is going to be cleared, and once it clears that these buy stops, price is gonna close the fair value gap. You see, there's a fair value gap there on H4, which eventually got filled, and when it filled, price rallied all the way to the bearish order block. You can see this last up candle in here. You see the last up candle, the low is coming in at 97.44, the close at 97.53. Now look at Friday's last bearish candle. The low is coming in at 97.0, the high is coming in at 97.45. The low of the bearish candle, bearish order block, is coming in at 97.44. See, that's a 1 pip dip into the order block before we saw a strong rejection to the downside, right? So now I'm expecting the sell stops above these equal highs here, 1, 2, there's sell stops there. I'm expecting price to continue with the uptrend and clear up. But yes, in this rejection block, this is also an ideal area for you to be hunting for short trades on dollar index and long trades on USD JPY. So 98 is the predicted price. Expect dollar index, according to my analysis and my forecast, expect dollar index to at least reach this level, right, in the coming week. You see, that means for those who like to take too much risk, if you are a risk taker, so you can go long on USD JPY prior to market open, long on dollar index, and then you can go short on Euro USD. You see, that is if you're gonna take a risk with the market. But for me personally, I'll be waiting for 98 to be reached. Once it reaches 98, it's not just gonna continue all the way to the upside. You're gonna see clear defined rejections at the 98 price level, and those are the ideas that I would take opportunities on, you see, because I'll be expecting now the the bearish momentum to continue. So probably this is a correction to the upside, you see, for the continuation of the bearish momentum. So that is I hope you've understood well what we are going to be looking out for on dollar index. So expect that fair value gap on a weekly chart to at least be closed. So this is the area that we are talking about. So these highs here, there's buy stops. Expect market to close that gap. Already we've cleared the buy stops here, and price is showing evidence that it's gonna trade to the upside. So that is the forecast on dollar index. We are anticipating a bit of gains to the upside before another strong bearish momentum to the downside. So now looking at USD/JPY, it's exactly the same thing. We are going to see, you see the current monthly candle for June on USD/JPY. I wouldn't be surprised if this candle close bullish come 2 weeks time. You see, I won't be surprised, because I'm anticipating USD/JPY to also trade to the upside, probably all the way to 107.85 or 108.10. You see, I'm expecting 107.85. See, that's a rejection to the upside. 107.85 in the coming week. USD/JPY should reject, correct to the upside. And then long-term target in the coming week is gonna be 108, 108.10, 108.20. That's for next week. This is being supported by the gains that are gonna come on dollar index, meaning the dollar is gonna be gaining, yen is gonna lose a bit of ground. And then on USD, Euro USD, I'm expecting further drop to the downside on Euro USD. We have reached our long-term target of $14. We have reached that, and we've cleared all the buy stops on a monthly time frame. So expect $12.18 and $11 as a long-term target for short trading. Let me go to a weekly chart. You see, so we've already cleared up stops above here, but there's still buy stops above this high here. So I'm expecting further drop to the downside in the coming week to our monthly level, which is coming in at $12.237, and long-term target for next week is also another monthly level of $11.50. You see, so I'm expecting fiber to drop down a bit to these zones here, and once it reaches this level now, that's when I'm gonna start hunting for a definite long trades to the upside for the continuation of this bullish momentum. So you see, guys, how easy it is. Once you have analyzed what dollar index is gonna do, make sure you get it right. You see, you make sure you get dollar index analysis correct, because once you have done that, the rest becomes quite easy to forecast where you're going to see price going to. So now this is a daily on Euro USD. Already we can see price is showing evidence that it wants to go to the downside. This bearish engulfing candle here, which later supported short trades to the downside, this happened during FOMC, where the strong rejection on a supply zone. You can see this candle dipped in almost close to 90% of this supply zone and close to 50% of this bearish order block. You see this last up candle here to your right, price dipped in and then rejected. See, these are the trades that you should aim to look at, guys. These are the trades that are going to help you to grow your account, you see, because they are definitely 90% in your favor. You see, you wouldn't be trading like in this strong rally, because there's nothing to the left that supported. But once you see price reaching into an old bearish order block, then you go to a lower time frame. You see, like you go to an H4. You see here we had a strong push to the upside. This is probably FOMC, right? Once you have seen that, and then you see price struggling to trade higher than the high which was formed, right, during a very strong fundamental release, then you open your short trade. You put your stop loss 5-10 pips above that high. You see, price dropped down nicely. You see, it is a very good short trade, close to like 170 pips. You see, these are the trades that you should aim to look at, and everything is supported with what the dollar has been doing in the previous week. You can see the rejection from a demand level, a strong demand level. We had a strong rejection. What is Euro USD doing? A strong rejection from a supply level. This is what I've been telling most of the guys in the mentorship. Euro USD and USD JPY, even Euro USD on its own, has got the ability to grow your equity massively. Once you do your analysis on dollar index, you open your trades on Euro USD with the support analysis coming in from dollar index. It's a mirror image, opposite mirror image of dollar index. You see this rally, you come to daily dollar index, there's a huge drop. Two candle correction to the upside on a daily candle, on a daily time frame. Dollar index, 2 bearish candle drop to the downside. So this is not a coincidence, guys. This is quite easy. So you can clearly see on a daily time frame, Euro USD is showing clear evidence that it's really gonna push to the downside. We have already cleared these old lows on a daily time frame, so I'm expecting this low to also be breached, and it's coming in at what is our low there? Dollar 11.93. So expect dollar 11.93 to be cleared, and once price reaches dollar 11.50, you see, that's an old high. You see, now that's your area way to look for a continuation to the upside. You see, right now we've got a bearish correction, right? Expect that correction to test the old high. You see, the old high is coming in at our old bearish order block. So once price comes there, then you are expecting market to push to the upside. Those are the trades that you should aim to look to trade. Once price reaches here, this is what I'll be anticipating. So you can probably set your own buy orders there, buy limit orders, if you are not always on the chart. So I hope you guys have understood exactly what I've put out in this weekly forecast. We're expecting dollar to gain a bit all the way to 98, or it can continue with the downwards momentum, but 98 price zone is where we should anticipate to reach on dollar index, which is going to support our long entries on USD JPY from $11.50, and then our short entries on USD JPY from 107.88 or 108 price zone. You see, expect market to at least rally, correct to the upside, then drop. So for those who haven't joined the mentorship, if you are interested, kindly inbox or just send me an email or something, then we can take it from there. And for those who would like to learn more about this institutional supply and demand concept, I've got my course on Udemy. You can just Google it there, and then you can join, you can enroll on the course. Once you're done with the course, then we'll add you to the mentorship. Mentorship is a lifetime. And for those who haven't subscribed to the channel, you can kindly subscribe so that you get notifications and all once I upload the videos, and you don't have to wait to search for it or anything. So yeah, that's pretty much about it, guys, and hopefully you've understood perfectly. I wish you good luck and happy trading in the coming week. Thank you.